Justin Trudeau is announcing a lot of housing changes right now in our housing crisis in Canada. One of them is being that the taxes are being removed from the purpose-built rental. Is this going to move a needle? I'll be breaking this down on this week's reaction video. And some other topics that will be rather political that we'll be covering is that he is now putting $74 million in London and what kind of impact that's going to make for accelerating the housing crisis, or not accelerating the housing crisis, but reducing the housing crisis, accelerating the building of supply. And then another one is cities in Southern Ontario are going to be increasing their property taxes, and Markham is planning to hike 90%, essentially doubling it. We'll be breaking all of this down and what some of the rents look like and what kind of the entire landscape of the entire housing market right now with all these policy changes being implemented and what it will look like in the near future. Now, if you are looking for some help on how to navigate this real estate market, whether buying, selling, or investing in this fall market, or especially if you're kind of having a little bit of concerns about where your portfolio or your property is, you can book a call with me using the link here to just discuss your personal situation, because everyone's got a different risk tolerance and different kind of like financial situation, right? So sometimes it does make sense to buy or sell, and sometimes it doesn't, to just hold. And I know I've been getting a lot of calls about people freaking out, and you know what? I've seen some people with their portfolio of all the kind of headlines going on, and they're fine. But I've also heard from a lot of people where they do need to sell, and ironically, the people who don't need to sell want to sell, and the people who need to sell don't want to sell. And that's kind of the underlying thing I'm seeing right now. So if you want to chat with me about kind of your personal situation, you can book a call using the link right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto Area, on top of making awesome educational real estate content like this one for you. And if you like the content we're putting out there, make sure you smash the like button and subscribe to get the knowledge out there. And full warning, this episode is going to be a little bit political. I'm going to try to be bipartisan, like kind of in the middle, and just look at the things that are being enacted. But, if it steers one way, my bad. So the first one we're covering is GST removal on rental builds won't lower prices anytime soon. So that's what an expert's saying. So I agree with this headline, okay? So let me give you a little bit of background. So there are taxes for the people, like the developers who build these purpose-built complexes, like apartment buildings, right? We haven't been building them for the last 2 decades. We had a big boom of them in Toronto in the 40s and in the 70s from what I remember. So this GST component makes up, I think, 5% or like 5.6%, something like that, on the entire complex of the building, right? So you cannot pass this on to the renters because you're just getting revenue. So by removing that 5%, it means that, hey, it's costing us 5% less to build this thing. So let's go through a quick example. Let's say downtown Toronto, you can build something, for the sake of math, $1,000 a foot. If you remove the GST component of it, that 5%, it's now $950 to build. It may make some projects more feasible, right? Meaning that, hey, you know what? That extra 5% we have to pay is like millions of dollars, and they can recoup their costs over a shorter period of time, meaning collect rent from these tenants, right? Now, is this going to move the needle enough? I personally say it's a direction in the right path, but I don't think it's going to move enough. And I'll give you a couple of reasons why. Number one, you do have to remember a lot of these purpose-built buildings are not under rent control. They're exempt from rent control, meaning that it's not going to be any affordable, because for people to actually or builders to build these things, the performers, like the numbers, have to pencil and they have to make sense. So that means they have to collect enough rent, and they have to anticipate that the rent will go up because there's cost to maintaining the building because you're owning the entire thing as opposed to a condo, right? So that, may help in the grand scheme of things because interest rates are a little bit higher, and it kind of offsets that right now. But if you reduce interest rates, yeah, it'll probably move the needle, because when Ford removed the rent control in 2017, a lot of people started building purpose-built rental because the revenue they could collect was not capped, right? And I'll put a chart up over here showing you the increase in that amount. But it hasn't actually moved the needle much with this 5%, is what I'm thinking, because it's a little bit too late, right? Because let's say it offsets some of the interest costs, numbers still not make sense. Number two, like I was saying, it's not affordable, right? So yes, it's going to increase supply, but it's not going to be for people who can't even afford the market rent right now, because it's going to essentially, I would say, by the time the inventory comes online, it'll be a little bit too late, and market rents maybe stabilize and don't increase as fast, but it's not coming down. Do you see what I mean? Because again, these numbers and these properties have to make sense. Now, does this make, some of these condo buildings convert into apartment buildings? There's a chance, right? I don't think so because it's very difficult. But when you sell a condo, there's a GST component and the buyer essentially pays for it. And if they, occupy it, they can get a rebate on it. Like in short, that's what it is, right? So that's kind of why a lot of the developers, rather to do a condo, they get all their profits up front as opposed to starting to collect rent over time. Because again, you need a lot more money to build these things because you can't take deposits from buyers and go to bank and get financing. You generally have to have a bigger chunk of capital, right? So is this going to move the needle? Yeah, some. Is it going to make it affordable? No, I don't think so. Yeah, so that's kind of like my take on it. Now, this is kind of, I guess it's experts. I don't want to butcher their name, but yeah, they're basically saying that removing the GST is a good first step, but like they're saying, like what I was saying, a little bit too late, and it will create more supply, but it will still take time to build this thing, right? So in the chart I showed you a little bit earlier, you can see like, yeah, we built some stuff starting in 2018, 2019, and they're starting to become complete now, right? And it's alleviating maybe a little bit of like demand on the supply side, but is it making prices come down? No, right? So that's kind of, I think, good. Now, one of the things here is that, and this is why I'm saying it's going to get a little political, he believes that this is really being brought up because there's a lot of issues being made right now about housing, and we have an election year next year. And I think I saw some preliminary pollings and the liberals are getting smoked right now. So is this a thing that could have done earlier? Yeah. Why is it being done now? Questionable, right? The next article we got here is Justin Trudeau details landmark $74 million housing pact with London. So this is the first city in, I believe, Canada to basically get an injection of money to kind of like facilitate building more homes, right? So this is the accelerator fund that they have. So they're saying that London has basically gotten $74 million to build 2,000 housing units and support new homeless systems. So again, critical thinking. My first thought is, cool, it's $75 million, give or take, for 2,000 units. That's 35 or 36,000 dollars per unit. So what are you building with that? Right? So I'm just like, okay, let's say you get an economy of scale, and assuming these are private builders, they do have the economy of scale and they're doing this the most efficient way possible in a free market kind of dynamic. Let's say, okay, 35 grand, what are you going to get? The kitchen, cabinets, flooring, and maybe some electrical and water done. The structure is still missing, the foundation, the framing, the roof, all that stuff is still not there. Like $35,000 is like some numbers that I know a lot of people who go into like apartment buildings and they try to renovate to increase rent. Like you can get away with like $10,000, $20,000 depending on the finishes and how big the place is. So $35,000 to build 2,000 new units seems unrealistic. Maybe $35,000 to refurbish 2,000 units, maybe helpful. Or if it's like that money is subsidizing some homes to allow people of lower income to get it, yeah, it may work. But build new units, yeah, I don't think so. The math doesn't pencil there. So they're saying here, the city's willingness to loosen zoning restrictions and an ambitious plan to solve the housing crisis led to the federal government choosing London first by Trudeau, said at the news conference. And this is against the backdrop of, him opening 42 units in London. Look, I don't want to get into this whole thing, but like 42 units in a housing crisis, cool story, bro, very good job, but still not enough, right? So is this a good thing? Yes. Are people going to get money and people trying to change the political incentive, how they're going to get money by increasing the amount of housing supply? Yes, and I'm going to touch on that on another topic about property taxes. But this seems a little bit of like theater to me. And I still, again, similar to the GST part, isn't going to move the needle. Like if you really want to move the needle and make things more affordable, stop immigration or reduce it for like just some set of time to allow all these programs to actually increase the supply and prevent prices from going up at paces we've seen in the last few years, right? Because you can create all the supply and call all these incentives, all this money, increase the supply by 50%. And that's, I think, me being generous. But if you're pouring 1 million people and another 1 million people miscounted into the property, into the country, the math still doesn't add up. You see what I mean? And this is kind of why I want to show you this chart, right? So you can see this is the rate of change in Toronto. And you can see that basically the average rent now is $3,100 at the end of the rental season. That's very high. Your average home here is looking like 3,500, right? And then your condo is a little bit below that. So when we are looking at like tenants applying for our property or like our clients' properties, we look for the 3x rule. So let's say you're $3,000 a month times 12, that puts you basically at 36,000 times 3, which is how much we want, the tenants have comfortably living there. That means it puts you at like almost $100,000. Yeah, actually over $100,000 just to rent these places. And if you're under $100,000 with low income, with a low credit score, yeah, we're not going to let you in, right? Because we don't make that recommendation. And unfortunately, that's what the clients want. They want that picturesque, perfect kind of client who's willing to pay that rent, have income, have good credit. Otherwise, they're just going to wait it out because the landlord-tenant board is so backed up, they don't want a bad tenant. And this is the problem that we're having right now. Prices are really high, right? Is all the things that they just announced going to move the needle? No, I don't think so. All right, so next article we got here. Markham tables 2023 budget with a 6.4% tax hike, so property taxes, not like sales tax, and admitting the impact of Bill 23. So Bill 23 is the Build More Homes Faster Act that the Ford provincial Ontario government implemented, and I'm not going to go through it. So this caught a lot of headline because I guess maybe people are misreading this, but essentially they're saying that property taxes are going to increase by 93.3% over 24 to 26. Look, when I look at that and I see the 93%, I'm like, Jesus Christ, right? That's essentially doubling, right? So if you have a property tax bill, like an entry-level freehold home in like Markham, you're looking at $4,000, right? So if that doubles, you're looking at $8,000 now. That's a lot of money, right? Now, when I read this some more, look, it's from 24, 25, 26, which is 3 years. So 93 divided by 3, that's a 30% increase a year. Generally, it's been like somewhere between 1 to 2. And I've argued that property taxes in Southern Ontario have been very, very low. I'm going to show you some stats a little bit after, and that we should increase property taxes. And looking at that, I'm like, look, are the property taxes going to suck when they increase? Yes. But I've said it in the past before. Will I pay more property taxes so that I can remove development fees so that we can increase housing supply? Yes, I'm willing to do that. And having seen this number and knowing that my property taxes in say like 4 years are going to potentially double, am I having a little bit of sticker shock? Yes, but does my idea of having property taxes increase to offset development charges still hold? Yes, of course, because you have to think about it. Development charges are for new properties. Who are generally buying new properties? Most of the time, especially like freehold properties, right? Not like condos, are first-time home buyers. So what having high development charges mean is that we're offsetting the cost of operating city onto first-time home buyers, and we're taxing them. And then the properties that are existing right now, the prices keep going up because we can't bring enough supply. And at the same time, the property taxes are compressed down. And you know what? Like there hasn't been inflation on property taxes in a while. So I'm okay paying higher property taxes so that it offloads the cost of new homes for first-time home buyers, and people who own homes already aren't just benefiting from this like crazy. Because if you think about it, I want the next generation to be able to own homes, not kind of turn to totally rental society, right? So again, I have no issue with property taxes going up. Is there a sticker shock and people are talking about this right now? Absolutely. If you read properly, it's not that bad. It's 30% a year. And I will say, this is not new, right? So there's an article from earlier this year saying that Bill 23, and if anyone wants to look at Bill 23, I'll put a link in the description below, but it just talks about removing development charges. And that's kind of why the city have to increase their operating budget, and they're also having more people go in, and there's more infrastructure and like roads and services have to be kind of created. The operating side is increasing, so therefore you have to increase the revenue, which is property taxes, right? So that's Bill 23. But in this article, you can see here, a lot of people were actually saying that, look, eliminating development municipal charges in exchange for the right to build certain types of home, money that these cities say that rely on to provide things like roads, sewers, public service, parks, and libraries, right? So when you eliminate that, basically cutting the red tape and to build more homes faster, it removes a lot of their revenue. And they've talked about this in the beginning of the year. And I believe Olivia Chow is actually going to increase property taxes. It's one of the platforms she was running on, right? So I don't think this should come to a shock. I think this was coming, and I think it's reasonable. But I do understand the shock that a lot of like homeowners are going to have and how upset they're going to be because property taxes go up. But you know what? Like I feel for the people who have call that a pension or like a non-increasing income and their property taxes go up. But you know what? We need to get homes in. And if that's unfortunately the cost of it, like the first-time home buyers and the younger generation to get in the market, I personally am okay with that. And I will pay the high property taxes. So in this article, you can see that there's an interactive map saying, red is facing a tax increase. I guess bluish gray is still crunching numbers, and gray hasn't responded. And ironically, Markham is the first one to come out and making a big fuss out of it. But you can see Newmarket, Vaughan, Toronto, Saga, Brampton, they're all planning to increase their property taxes, right? Just so that they can, afford all of this like Bill 23 stuff, right? And down here in this article, I know like just some ideas of like what other cities are predicting. Like if you're in Sydney or Vaughan, you're looking at 77 to 88% increase over some time, right? So almost doubling. Markham is 93. If you're looking at Stouffville, you're looking at like 50% increase, right? So property tax increases are coming. Again, maybe inflationary, but I personally think it's normal. Because if you look at some of these property taxes, how they're assessed is there's a multiplier. So we call this the mill rate, and it's multiplied by the assessed value. So let's say you have a property that's worth $1 million. A lot of the times it's actually assessed at like maybe half the price, right? So that 500,000 assessed value by MPAC, right, is multiplied by in Toronto 0.6. So it's super, super, super low. So by increasing the mill rate here, which is fine. Now I want you to look at the top few cities on here and imagine what the prices are. Toronto, expensive. Markham, expensive. Richmond Hill, expensive. Vaughan, expensive. Milton, kind of getting up there. Burlington, Oakville, expensive. Aurora, Newmarket, pretty expensive, right? And all of these are sub 1%. If you go into the other areas, kind of like in the Durham region, even Kitchener-Waterloo, or some of the more investment-oriented properties, the taxes there as a mill rate is significantly higher. It's just that the values are a lot lower. So do we need to increase the property taxes on these higher, like more expensive properties? I think it's fair because these cities have had their values increase like crazy. They've like tripled in the last like 10 years or so. So can homeowners afford a little bit of tax? Yeah, probably. Again, that's my stance. It may not be a popular one, but I think this is the right thing to do, even though there'll be a lot of uproar. Anyways, this is kind of like the political side of what's happening in the real estate market. Are we going to see a lot more things coming down the pipeline? I definitely do think so, and I'll keep you guys updated. But if you're more concerned about kind of like what your kind of personal situation looks like, your primary residence, your portfolio, and whether you should deleverage, or if you're an investor and you're looking for opportunistic things right now, there are some areas that are opportunistic right now. You could book a call with me to kind of chat about what you want to do and see if it makes sense in this kind of environment, this interest rate environment, this like inventory environment, and this like weird sentiment kind of environment, because it is all very weird right now, and it's very hard to make sense, especially to apply to your own personal situation, right? So if you want to chat about that, you can book a call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?